You swipe your card for a $12 purchase. It goes through. No warning, no red flag. Nothing seems unusual. 2 days later, you open your banking app and your stomach drops. Your account is down $47. You stare at the screen trying to figure out what happened. You didn't buy anything extravagant. You didn't splurge. You were just living your life. And yet, one small miscalculation triggered a chain reaction that cost you far more than the purchase itself. Here's the part most people don't realize. Banks are not neutral bystanders. There is a specific line in the sand inside the banking system that quietly determines how harshly you are penalized for small mistakes. And that line is $200. This number is about to matter more than ever before. Regulators have decided that accounts hovering around this level should not be treated the same way as accounts with thousands of dollars. Some banks are adjusting, some are watching closely, and depending on how it unfolds, you could either keep more of your money or see fees appear unexpectedly. By the end of this video, you'll understand exactly what changed, why the $200 threshold is important, and what steps you can take to protect yourself before your bank quietly updates its policies. Who I am and why this matters. Hi, I'm Susan Harper, and I break down complex banking rules in plain English. If you've ever felt like the financial system is confusing on purpose, you are not alone. Most fine print is intentionally opaque. It benefits the banks more than you. Today, we're unpacking what's being called the new $200 rule in American banking, what it actually means, why it's happening now, how it could change overdraft fees for millions. We'll explore how banks make billions off small account mistakes, how regulators are stepping in, and how banks might respond. This isn't just one rule. It's about who the system protects when money gets tight, and that's relevant to anyone with a checking account. How overdraft fees became a multi-billion-dollar business. To understand why $200 suddenly matters, we need to look back at the rise of overdraft fees. On the surface, overdraft protection seems helpful. Spend $60 with only $50 in your account, and the bank covers it. Convenient, right? No awkward conversation at the register, no groceries returned. But here's where it spirals out of control. That $10 shortfall doesn't just sit quietly. Banks tack on a fee, usually around $35. Your account is now negative $45. If another small transaction goes through, or if your paycheck is delayed, another $35 fee triggers. What started as a $10 mistake can multiply into $70 or more, not because you're reckless, but because the system was designed to stack fees quickly. This isn't rare. Banks make billions annually from overdraft fees, and those fees hit customers living paycheck to paycheck the hardest: younger account holders, working families, and low-balance accounts. The CFPB and the $200 threshold, the Consumer Financial Protection Bureau, CFPB, started paying closer attention. Their question was simple but profound. If a bank covers a small shortfall for a few days, should it be allowed to charge whatever it wants, or should fees reflect the actual cost of the service? The $200 threshold marks vulnerability. Accounts at or below $200 are statistically more exposed. Regulators are signaling that banks cannot treat a $75 account like a $7,500 account when applying fees. Banks must now justify fees, disclose them more clearly, or rethink low-balance overdraft coverage. Think of it like paying $500 for a $20 car part. It feels unfair, and regulators agree. Practical impact for consumers. So, what does this mean practically? Reduced overdraft fees. Some banks are already lowering or eliminating them. Transparency, clearer disclosures, fewer surprises. Opting out. You can decline overdraft coverage, avoiding cascading fees altogether. If your balance hovers around $200, this can save hundreds of dollars a year. Even just two $35 overdraft fees a month amount to $840. enough for rent, groceries, or car repairs. The banking response banks don't give up easily. If one revenue stream declines, they might introduce new monthly maintenance fees, raise minimum balance requirements, charge for previously free services, be more selective about approving new accounts. This doesn't mean the $200 rule is bad. Consumer advocates praise it, but the economics won't disappear. Just like rent control, the market adjusts. A broader perspective, post-2008 regulation. The $200 rule is part of a larger regulatory shift. Post-2008, oversight failures highlighted how vulnerable consumers can be when financial institutions hold all the information. The CFPB's mission: financial products must be fair, transparent, and understandable. Overdraft fees are now under that scrutiny, especially for lower balance accounts where timing and small mistakes matter most. The numbers are staggering. Americans pay roughly $9 billion annually in overdraft fees. A small percentage of account holders contribute most of that revenue. Regulatory changes could redirect billions back to households, stabilizing finances and boosting the economy at a personal level. Practical steps for viewers. Check your bank's policy. Know your exact overdraft fees, caps, and transaction order. Consider opting out. Decline overdraft coverage to avoid penalties. Shop around. Credit unions and online banks often have lower or no overdraft fees. Awareness is your strongest defense. Understand the system before it costs you. Looking forward, what to expect? Lower surprise fees. Potentially new account structures. Subscription-style checking, minimum balance requirements. The $200 line won't eliminate risk, but it shifts the playing field. It signals that lower balance accounts shouldn't be easy revenue sources. Conclusion: your money, your awareness. That $12 purchase turning into $47. Under the new rules, that escalation should be harder. The $200 threshold is a regulatory attempt to make the system fairer, especially for financially vulnerable customers. This isn't just about fees. It's about understanding the rules before they hit your wallet, recognizing banks' incentives, and staying informed to protect your finances. The era of automatic, unquestioned overdraft penalties is being challenged, and how you respond will determine whether you're protected or caught off guard. Next steps. Review your bank policies today. Decide whether to opt out of overdraft. Share this knowledge with anyone living paycheck to paycheck. Your awareness is your best protection.